Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD for Monday. If you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, this is a 1 hour chart of gold USD in front of us, and finally gold closed above 2000 level. Market closed at 2006 and gave us the clear indication that gold is about to continue the up move again. Gold breaks above 2000 level. Gold rose above 2000 an ounce on Friday and booked the third straight weekly gain as geopolitical uncertainties in the Middle East provided support to the metal. Israeli forces staged their largest ground attack in Gaza so far in this war with Hamas overnight despite ongoing diplomatic efforts to delay an expected full ground invasion. So the situation is intensifying again, as a result of which we can see gold going up. As we all know, whenever there is a crisis in the world, gold goes up, and right now we can see the same story. To be honest, there is not much to discuss on the chart of gold right now. Yesterday, when we were discussing about the possibility of gold breaking 2000 level in the 1 or 2 days, to be honest, I was not expecting an immediate response like this. I was hoping that by next week we will see gold breaking 2000 level. But yesterday, when I saw that gold broke 2000 level, to be honest, I was surprised. Okay, but we can't do anything. We are traders. Okay, we need to act. We need to be flexible accordingly. Now we need to act accordingly and we need to be flexible actually. So let's discuss the opportunities in the market right now. My dear friend, if you are on the buy side, you are making good money, you are in good profit, and please do not exit because further upside is possible. This is not a day traders market. This is a market where you take a position and sit and just watch the money growing. Okay, so if you already have a buy position, sit with your buy position because further upside is possible. And if I take you to the weekly chart of gold, then you can clearly see that on the weekly chart of gold also we have a high chance that gold will be heading towards the high of 2080, and this time there's a good chance that gold will break 2080 and move higher. Okay, if gold fails also, 2080 is far away and you'll be making a hell lot of money, isn't it? So as of now, if you have a buy, be on the trade, no need to exit. And if you have a sell position, surprisingly, if you have a sell position on the chart of gold and if you're hoping for a trend reversal, then chances are very less. Because right now fundamentals will be pushing gold towards the upside. During the weekend, if any news comes out and if market, not market, okay. And if the situation changes, that's a different chapter. But right now there is no such news in the market. As a result, gold will be going up. So keep in touch with the news. If you have a sell position, if any news comes out, then there's a hope that you'll see a trend reversal. But if any news doesn't come out, then obviously gold will be going up and you need to exit from your position. And because if you do not exit at the right moment, you will not only be losing your capital, but you will be losing everything, your hard-earned money. Okay, don't make the mistake, because we always focus on the entries, okay, but exiting at the right moment is also very important in the market. So if you have a buy, be on the trade, further upside possible. If you have a sell, and in the absence of any trend reversal news, you need to exit immediately because there's a high chance that you will be losing your capital. And if you're looking for fresh position in the market, then my dear friend, the simple strategy is what? Buy at dip. Yes, buy at dip. Very simple strategy, but very effective strategy in any market of the world. Okay. Because right now the market sentiment is very bullish. So as a result, whenever market will be coming for some retracement, you can look for some buy position if you have missed the previous opportunities. In this case, where are the possibilities of support then? So first of all, you can look for some support around 1980. You can look for some support around 1985 because we have got the moving averages. You can see we have the 50 moving average at a 1985-86 level. Then we have the 100 moving average at 1980-81 level. So if market comes down for retracement, you can go for a buy, but do not go for a blind buy. Okay, just observe the market. If you see market taking support, then only go for a buy. Do not trade blindly. So these are the two levels where you can look for some support in the market. If market comes and bounces, you can easily look for a buy position. But if the situation escalates, listen to me carefully, if the situation escalates, then obviously market will not be coming for retracement around this area. In that case you can also look for some buy around 1993 to 1996. Remember 1993, 1996? This was the previous resistance levels, the previous highs of the market. So the previous highs of the market will be acting as the new support. So the previous resistance will be working as the new support. Here also you can look for some retracement. On Monday, especially on Monday, we don't get to see much volatility. Market is usually slow. Right after the market opening, if you see the market is coming down with small red candles, you can also look for some support around 1993, 1996. The previous resistance will be working as support here. If you see market taking support, market is showing price rejection from below, you will get a confirmation that yes, previous resistance is working as support and you can look for a buy position. Okay, so these are the levels where you can look for some support in the market so that you can go for a buy. But if you already have a buy, okay, you are already enjoying it. Yesterday market almost made the high of 2010. 2010 was the high made by the market yesterday. So in case you see the market is not at all coming for retracement, and because of some news in the market is flying, high chance, okay, if gold starts flying, then you can also look for a buy above 2010, above 2010. But observe the market, then only take the decision, because see, usually we don't get to see much volume in the market, volatility in the market, and probably you have heard me saying a lot of times that a breakout or breakdown is not possible in absence of volume. So there is always a fear of false breakout, especially on Monday. So be careful and please follow proper risk management. Do not gamble. So keep in touch with the news. Any news will bring drastic change to the market. So let's see whether the market flies or market comes with retracement. But in this market situation, observing the market sentiment, there's a high chance that yes, market will remain bullish for the next couple of days. So as a result, buy at dip is the best and the safe trading strategy that you can follow. I'm repeating again, the support levels on the market right now are around 1985, 86. Okay, but the problem is that the levels are far away, and if market doesn't come for retracement, okay, then you'll have to look for some support around 1993, 1996. The previous resistance will be working as support. But in case because of some news in the market, if market doesn't come for retracement at all, you can also look for a buy at breakout above 2010 level. But yes, it is little bit riskier, so you need to be careful with proper risk management. So that's all from my side, my dear friends. Have a happy weekend. Enjoy time with your friends and family. And if you're looking for a good broker, if you're not happy with your present broker, then you can also consider opening your account with GTC. GTC is a regulated broker. To be honest, the best reason, okay, of opting GTC is that there is no slippage at the time of news. If you're a trader, if you love to trade at the time of news, then you probably have also faced the problem of slippage at the time of news. GTC is a liquidity provider itself. So as a result, there is no problem of slippage at the time of news. And the best part is that you also get fund protection. There's a brochure here. If you want to go through the brochure, you'll know about the broker. GTC is a reliable option. You can also look for GTC. And if you open your account through this link, through my link, then usually the broker provides a leverage of 1:500. But if you open your account through my link, then yes, your leverage will be 1:2000. So if you're looking for a better broker, then please go through the brochure. If you feel that yes, GTC, okay, can be the solution for you, then yes, you're most welcome to join. Bye bye, take care.